Silicon Valley-based investors, also how the market access approach works as well. So one thing what we can guarantee you, there are certain information Google cannot find, where this panel discussion is going to throw that limelight as well. So I'm happy to have Mr. Avi Kumar. He's happy to have you, and Radesh Kanmuri. He's about to join us in a minute. He's part of managing partner at Arca Venture Labs, and then we also have Shashi Reddy, managing partner at SRA Capital. Also happy to say he's also one of our board of director at eHub as well. So with that, I also would like to welcome Mr. Venkat Raju as well. He's a serial entrepreneur and also corporate executive with deep business technology experience as well. Also, he's an investor, mentor, and director, wears multiple hats. And one more thing, glad to say is he's also an advisor for incubators, accelerators, and funds as well. So with that note, welcome you all. Over to you, Venkat.
Thank you. Good evening, all.
Oh, thank you. Radesh is also joined. Thanks so much for joining us, Radesh. Over to you.
Thank you.
Yeah. Thank you all. It's a pleasure to moderate this panel of distinguished professionals and investors here. And as I am told, the audience primarily are those founders focused on the India market and seeking to entice US-based investors to look into their startups. And another group of founders who have started their operations in India, but focused on North America as a market and how best to position. And this is a very impressive list of panelists. So if I may, can I request each one of you to introduce yourselves and your fund thesis especially. Thank you. Sashi, you want to go first?
Sure. My name is Sashi Reddy, and I live in Philadelphia. I'm an early stage VC. I've been investing for the last 10 years. And I run a small fund called Sri Capital. So the stage that we get in is usually seed or pre-seed. So basically checks of $1 to $2 million. Though we've done a few consumer investments in India, largely our focus is really enterprise SaaS. So that's what we've been doing for some years now. So our ideal company would be someone that's building technology in India and selling to the US market. And then we try to help them with some of the market entry and making introductions for the next round of funding, things like that, which are targeting the US market, recruitment of senior people and so on. So besides the early stage stuff I do with Sri Capital, I'm also an advisor to a PE called Westbridge Capital, where we do growth stage investments. Also, again, India-US SaaS, check sizes that are much larger, maybe in the 20 to 100 million range. So those are the two roles I play, largely enterprise SaaS, both early stage to my fund, as well as an advisor for growth stage investments. Thank you, Venkat.
Thank you, Sashi. Abhi, if I may request you to introduce yourself, please.
Sure. Hi, my name is Abhi here. Abhishek, actually short as Abhi. I essentially represent M12. M12 is Microsoft's venture fund. We are a financial first fund, which means we invest for financial returns, plus also to create value for our founders. So we leverage the power of MS to get access to the ecosystem. You name it, co-sell, GTM, co-marketing, co-engineering. We try to bear the value that we can get from MS to our founders, able to work collaboratively with them and grow and scale them. We essentially are a Series A and B fund. So we actually come in at, when essentially there is a product market fit or at least signs of it, and we can really help you grow and scale globally. Check size, sweet spot is between 5 to 15 million. We can go slightly lower, slightly higher. So the spread is between 2 to 20, but Series A and B, 5 to 15. We have one global pool of capital. So we don't have geo-focused sleeves of it. So essentially we have 4 geographies that we cover, which is North America, which is based on the Valley. We have a team in Tel Aviv. We have a couple of colleagues in London, and I'm based out of Bangalore looking at Asia.
Thank you, Abhi. Over to you, Radesh.
Yeah, thanks, Venkat. So I am managing partner of Arca Venture Labs, which is a B2B focused fund, and it basically invests in seed and pre-seed stage in B2B startups from between India and US corridor. And what we provide is, besides investment, we provide mentoring and connects to the right set of folks in Valley as well as in India. We have made currently 24 investments since inception in August 2018. We got 3 exits, and 5 of the companies have got their up round from the likes of B Capital, Matrix, Nexus, Facebook, Samsung Next, and expecting another 5 more up rounds in the coming few weeks. And by this year end, we should be completing 28 investments. So that's a quick snapshot. And in terms of investments, we have made all in enterprise focused companies across sales tech, retail tech, marketing tech, healthcare, HR tech, cloud infrastructure, machine learning, DevOps, energy tech. So a bunch of horizontals and verticals and business areas that we have made this investment. So yeah, I think it's been a great journey since starting Arca Venture Labs in August 2018.
Thank you, Radesh. A quick introduction about myself of relevance. I've been a serial entrepreneur. I have had 2 exits in Silicon Valley and 1 here in Bangalore. And obviously, I've raised multiple rounds of funding as part of this journey, both in the US and in India. These days, I spend more time on the other side of the fence as an active angel. I have about 70 plus startups in my portfolio, both US-based and Indian startups. And I'm a VP venture partner at 2 funds, URNest and Entrepreneur First. Anyway, let's move on. So the plan is I have a set of questions I'm going to be targeting towards one of the panelists, but once that member talks about or provides the response, if any of you, the other panel members feel like adding anything, please feel free to do so. So my first question is to Sashi. From an investor's point of view, how do they differentiate Indian startups from their Silicon Valley counterparts? This is specifically US-based VCs.
Okay, so I guess if we start with the assumption that both the startups are being led by phenomenal entrepreneurs, the tech is equivalent and all things being equal. So I just want to make sure that I put that qualification out there in the front. Then I think, some of the things that we would take for granted in a US headquartered startup, we would sort of look to get something like that in the Indian headquartered startup. So one is, I think we'd be looking for the governance side to make sure that, it's fully compliant, clean, things like that, which, and of course, we also look at the size of the cap table. Sometimes we have like a lot of investors on the cap table. We know in India, we could have problems if there's any like a dispute and so on and so forth. So those are things that we would look for. So besides the governance and like the basic hygiene factors, the other key thing that we would see as like a difference between US and Indian startups is that because the US market is so massive, most US startups tend to be quite focused from day one because they sort of know that they're going to do a certain product or service targeting a certain market, and that market in the US will likely be really big enough by itself. In India, because we still don't have, at least for enterprise software, a big enough market, sometimes we see the startups in India being more broadly focused just because they just have to make sure that they have enough of like a target market. And it's only, I guess, when they get to the US side that they then start to focus much more. So I think that's one key difference I've seen between the Indian and the US startups for SaaS at least.
Thank you, Sashi. My next question is to Radesh. How do entrepreneurs in India stack up against their counterparts in the West? Especially these are potential counsel for Indian founders seeking to scale globally, especially in America.
Yeah, so Venkat, I've been now interacting with enterprise startups since way back in 2014, and I think we know each other from those times. I mean, at that point of time, what I could see is that a substantial difference was in terms of the confidence and the articulation the ability to sell between US founders and Indian founders. And that particular gap, I think over the years has been reducing. I'm seeing more articulate founders who are from India and then basically looking to sell into the global markets. And also in terms of the way they are presenting, I think a significant improvement in that particular aspect. So I would say that that's a very welcome change coming up here in India, and especially over looking to the selling to the US markets. And what I'm also seeing, another trend is that, like as we see right now, a lot of Indian founders are already based out of US. So basically, they must be working in large MNCs or in startups in the US, and then they decide to come out with their own company, and then they basically set up a deliver C Corp, and then they have one of the other founders sitting out of India who typically is a CTO or a head of marketing or customer success, and this combination also I'm seeing pretty often, and I think it's a great combination if you ask me. One, he gets that ability to sell to the US markets, as Shashi mentioned. Once basically you're closer to the market, you know what's happening, and then also increases the probability or chances of selling to the clients in the US, and at the same time taking advantage of the massive talent skills that are in India, and then building the product or doing things around marketing and doing strategies around inbound sales. So it's a great combination that's working.
Thank you, Radesh. Again, let me repeat, if the other panel members feel like adding to whatever Radesh mentioned, please feel free to say so. Okay, my next question is towards Abhi. There's a lot of hype and chest thumping going on these days. We are the #1 startup ecosystem. Look at the number of unicorns in 2021, etc. We have arrived. And can you provide your perspective in terms of the maturity level of the Indian startup ecosystem compared to Silicon Valley, for example? Where are we and how far do we need to go to catch up?
Thanks, it's a great question. I'm probably part of this chest thumping crowd here, so I'm definitely bullish on the Indian ecosystem. I'll also set the context a little bit. In my opinion, if you think about a very brief timeline of history in terms of the innovation happening, the Valley probably started back in 1960s essentially, and it's been a nice 50-year ride to it. If you look at the numbers, we are #3rd ecosystem in the world, as we call out. But we started really innovating, or we sort of been thinking about startups as they exist in the current context the last, let's say, about 15 years or so, right? So if you look at the amount of investments going into the Indian ecosystem, is about 1/10, roughly about 1/10 of investments going in the Valley, in the US ecosystem. Same is number of unicorns, so 1/10, right? So essentially, we have kept pace at the kind of investment and the startups coming out of Indian entrepreneurs and exits and innovation and sort of unicorns as well. So I think we have done quite well to stay pace. I think earlier on, probably in our journey as a startup, sort of a hub, we were discovering what models work essentially, right? And what are good ways to kind of go and sell to the world. What we are seeing now is repeat founders coming into the fray, right? So been there, done that, second, third time founders coming in. What we are seeing is a lot more crystal clear focus on product in what they're building, either for domestic markets or for global markets, right? I think it was said earlier as well. I think we're seeing a little bit more maturity there as well. So I think where we need to essentially, and I think we have latched on to something very interesting, which is SaaS. So to me, SaaS and applied AI are the two sort of key strengths of the Indian ecosystem, probably because you can sit in a small town outside Chennai and sell SaaS to global companies all over the world, right? So I think we have proven a mettle there, and we have proven we understand the product and the customers can sell to them. I think the places where we probably haven't done as much, or at least I haven't seen too much of, though there are pockets of sparks here and there, is deep tech. We obviously haven't done too much in deep tech. We haven't seen too much in deep tech. So there are a couple of companies even in our portfolio, they're doing some great work in sort of what I call a little bit more deeper tech. But I think as you see a lot more innovation there, we will also be looking at more of a stronger innovation that can scale globally and then just applications of it. But they're both different business models, but we are seeing more of one and less of the other.
Got it. Small town near Chennai, doing it successfully. Bet you were referring to Zoho, but nevertheless. Let's go on to Sashi.
Add to that, Venkat,
please.
if I may.
Please.
What has been Abhi. So I do agree with everything that Abhi said. I think it's like a fantastic time for the Indian startup ecosystem. But I would say that probably I would wait another like 12 to 18 months to make sure that we are really seeing like a big turnaround. And that is in terms of the exits. You know, I think the last 6 to 8 months have been phenomenal for the Indian ecosystem with like Zomato IPO, and you know what that would lead to is you know some sort of like a cascading effect where some of that money will come back into the startup ecosystem. All of that's great, but you just need another like 10 of the Zomato level IPOs for us to make sure that we've got the whole cycle fully functioning. So I would say that I think we're probably like 12 to 18 months away from like full-blown enthusiasm for seeing the cycle actually come around full circle. So that's it.
Fair enough. Fair point. Any other comments on this?
Yeah, and I think with regard to the ecosystem here, which was, I think what I'm seeing is that it's developing well. So one is the set of investors. I think they have proliferated multiples over the last 3 to 4 years. A good startup will be typically having a lot of choices for investment, and he can decide basically, even if he's getting the money, what is the additional value add that he can look out for investors once he chooses a particular investor. So that is a great sign. And there are specific subject matter experts basically who are having this ability to mentor on specific areas like marketing or go-to-market or channel strategy. I know Venkat, you have also been a mentor to quite a few startups. So that's, I think, another great positive signal that I'm seeing in the Indian startup ecosystem. And another thing that I'm basically noticing is that, as I mentioned earlier, a lot of people and the serial entrepreneurs, the repeat entrepreneurs, which Abhi mentioned, definitely one set of people who are coming in. And then a lot of people who are working in system integrated companies like TCS, Infosys, Cognizant, they are coming out and starting their own startups, as well as folks who are working in Series A, Series B companies, and they are coming out and starting their own companies. So, and many times I've seen that people who are working in like Series B and C companies, the founder himself basically invests a part of like it becomes an initial investor into the new company set up by his employees. So that's I mean, another good sort of trend that is seen right now.
Okay, thank you for that, Radesh. Switching gears a little, Sashi, if I may ask you, funding model for VCs. I mean, clearly there are certain common theses, etc. But can you please call out some significant differences in terms of how they view startups and the founders in Silicon Valley versus India?
Yes, I think, as you're saying, Radesh, you know, there's been a significant change in the quality of entrepreneurs over the last few years. I mean, just a massive change. It's like exponential. Like for some of us who've been doing this for, say, like the last 10 years, it's been a whole different change of the quality of the entrepreneurs and so on. And also at the same time, there's been a significant change like the valuations. Earlier, when we used to invest in Indian companies, it was at a steep discount to the companies in the US. Now, that discount went away really quickly on the consumer side, where like, the valuation shot up dramatically. And then SaaS was still cheap until like 3 years ago. And now even the SaaS valuations are fully caught up to, I think, the Valley valuations. Maybe not fully, maybe there's still a discount because in the Valley, you're still seeing valuations at 15 to 20 times ARR, the early stages. And in India, it's still maybe on the average, 7 to 8 times ARR. But even there you have exceptions. And I've seen deals which are at 40, 50 times ARR as well, both in India and the US. So I think valuation-wise, that's also similar. From the funding standpoint, I think one of the differences I'm seeing is that in the US, we're using a lot of these like safe notes with a valuation cap. more convertible notes until much larger rounds happen. I think in India, we tend to price the rounds sooner, I think, than we do in the US. So I would say those are some of the differences, what I'm seeing between the US and India, I think.
Okay. Abhi, would you like to add anything further on this topic?
Yeah, I think Sashi has covered it well. I think what we're also seeing though is, definitely, valuation expectations are catching up with the valley, if not all the way there, as Sashi pointed out. But what you're also seeing is essentially in terms of what I call the living dead, or whatever the right term for it is. In the US, in the valley, there's fail fast, fail quick, right? Essentially, so you will basically discover, do you have PMF? Do you actually have a real business around it? You will move really fast, and you will fail. And that's a good way to be able to understand and prioritize where your company is going for. What we see in India is you can sort of exist for a long time with sort of basic capital, which sort of prolongs the actual sort of hit rate for the startup in terms of what the focus geographies are. They sometimes get distracted by services elements to it. Services is fine as long as it gets you to the place where it is, where you're trying to get from a product standpoint. So to me, services essentially is non-dilutive financing, as long as you stay focused on the product, right? Number one. But what we have seen is essentially, people just take sometimes longer to discover their PMF and really go hit the bullseye in terms of market and the ICP of the customers they're going after.
Fair enough. You've been a little polite. If I were to interpret and in my own way be blunt, there are a lot of zombies out here in India. Right. And there are several reasons as to why they continue to exist, because it's very difficult to shut down a company as well. So, but that's a completely different topic by itself. I don't want to go there. Okay. Following on the same trend, Radesh, if I may come back to you, and if you can touch on, especially towards founders in India seeking US as a prime market, what are the market dynamics that they need to be aware of, even if they have achieved product market fit or like having fairly good traction in India? What should they be expecting, especially any nasty surprises they should be aware of?
Yeah, so in my experience, now I've been working very closely with all enterprise focused companies and who are basically looking to crack the US markets. Sales in India, whatever the quantum is, doesn't mean much when you are going and hitting the US markets or European markets. One has to think through absolutely from beginning in terms of how does one get going. The other thing is that initial sales has to be founder-led. The experience of hiring sales folks in the US with the founder sitting here, and then expecting the salesperson to actually in the US to close the deals, it doesn't really work according to my experience. The first few sales has to be done by the founder, which means either it will be it's very useful if the founder actually relocates, or if not, at least shuttles a lot between India and US. And what happens is that's a discovery process when the founder is making those sales with the clients in the US. And once he has formed a playbook, which typically takes a few months' time, after that, at that point of time, he or she can delegate that to a sales team who can basically take that forward. At least in the stage in which I am investing in, that's my experience. So yeah, it has to be founder-led, and first few sales has to be founder-led, and then basically it has to be like seen as starting from scratch any particular sales they want to make in US or in the European market.
Thank you. Any other points on this?
Yeah, I'll just add to what they just said. In fact, we come in slightly a little bit later. So, from that spectrum, I haven't had a founder say, I wish I had waited to move. They all want to move earlier, because I think it's a different, especially if you're serving for US markets, right? It's a different perspective you get being on the ground there, meeting your customers, meeting your team members, meeting your other investors, etc. So we highly encourage the founders to if you're building for US markets, if you can build from day one, that's fantastic. So we have a portfolio company that just announced this funding called Innovator. They built from day one for the US markets, right? They did some experimentation previously, but the target was very clear. You can build from day one for US markets, great. If you can't, and you still need to get essentially your proof points in the regional market or local market, that's okay, as long as you make that switch sooner than later to the US market. And you actually have to have a founder move there for sure. It's very hard to really build a team, really build the center of gravity, build the mind share by sitting out of India. It's doable. I mean, I think we've learned from some great companies who have done that, and they probably move later than they I would be recommending here, but they've done it. They've demonstrated it can be done. But generally, the rule of thumb is to move sooner than later.
Yeah, to just add to what's being said by Abhi and by Radesh, I could not agree more. We've done a whole bunch of investments where the understanding was that the founder would move to the US as soon as we made the investment, and that never happened. And this happened in a few different companies. And none of those companies achieved their full potential because we have this myth in our minds that I've heard of this company like in Chennai that didn't have any salespeople in the US, but was able to sell and grow. But that's almost like a one-off myth. Unless you are in the market and understand the market, it's just not going to work. And especially in the early days, the founder has to understand what are the US customers looking for. And there's just no way around that besides sitting in the market. It's not even enough to just fly once every quarter for a week. And so, but I'm happy to see that in the last couple of years, that whole thinking has to, people understand that, I have to be there to actually make this thing succeed. And that's a much, much better outcome. I think there's no way around that. Yeah.
All three of you said the same thing, and I vigorously agree. Any company that has achieved sitting in Chennai, I can capture the market, is more like an outlier, and it is not the norm. And it's absolutely important. Founders make the initial sales, especially when you're trying to open a new market. Okay. Switching gears, this is a question to Abhi. This is towards founders who are Indian with India as the prime market. And there is this thesis, although there are a lot of investments that's come in and the startups are growing rapidly, it is still an underserved market from an investment perspective. So how do such founders gain the attention of US investors, how to get in their radar and entice them? Abhi, are you there?
Sorry, I was just chatting with myself. I was on mute. I think founders, I'll take a step back for a second, Venkat, and ask a question. What does an investor really do essentially, right? So, I think the way we say there's a strong founder market fit, the same way I think there's an investor company fit as well. So I think that's each founder has to really understand that the color of the money is not just green, it differs by investor to investor. So what's the value are you expecting from the investor? Are you expecting the investor to really help you get, as I think some members have mentioned here, they really help with early talent hiring, right? Do you want talent that you want to be brought on? Do you want GTM help? Or do you want essentially just pool of capital and that's all you want, right? Or you want signaling, whatever you essentially want. I think if you really think about the value you build, and I know this is going to sound very far-fetched, but essentially you have to build your cap table up to the point of an IPO in some ways, right? So you're really building up, figuring out what do I need at this stage as a seed stage or a pre-series A stage? What do I need at A and what do I need at B? So, there is enough and more investor capital in India slushing around, to be honest. So I think once you figure out what really you're looking for, there is really a very targeted list of investors to go after. It's not essentially carpet bombing that. And any of your advisors will help you get there, what the short list is. And I think they all bring a different value to the founder. So if you're trying to essentially attract, let's say, a US investor for a specific reason, because let's say they understand Web3 really well, or they understand a particular market segment really well, I think that's the value you have to sort of speak to from the thesis perspective. So I think going through your networks who essentially can really bring you the right people, kind of speak to what you are doing is obviously, these are all sort of tried and tested paths, but really having the value you want from the investor and articulating it out, really helps investors also understand, can they really create value for you, or are you just one of many that they're talking to? So I think being very sort of thoughtful helps.
Thank you for that. My next question is to Sashi. Let's take a step back and look at sector diagnostics. Are there any preferred sectors that's common in India and the West? And then are there any sectors specific to the West and specific to India? Your thoughts, please.
Yeah, so let's start with the specific side. I think in the US, there's a lot of activity like the biotech space, just a phenomenal amount of money going in. There's a lot of people doing amazing work in biotech. And I think with like the virus, there's been a further boost, both from the government funding as well as a whole bunch of other investors really backing biotech. So there's a lot of activity there. You don't see much of that in India, of course. Again, I think it was one of the other panelists who actually pointed about the deep tech. I think there's a lot more deep tech activity, but I'm telling you that, getting deep tech in certain sectors funded is hard wherever you are. But in the US, there's a lot more money for deep tech. And while in India, I think I've seen some really interesting startups come out, but it's very hard for them to get funded out of India. They just have to sort of move to the US and get funded there. I think in terms of India by itself, I think we've had trouble getting funding for some of the consumer products, but I think with the Nykaa IPO, I think we're going to see a lot more money flowing in that direction. I think we'll see a little bit of that. In terms of the SaaS space, of course, the dream is, of course, I think India has a real potential for some significant gain in SaaS. Significant. I think we are probably like a couple of % of the total SaaS spend, which I think should get into the double digits probably very, very soon. So I think that whole SaaS space is great. And I think in that SaaS space, I think there's almost like a shared view both in the US and in India, because even a lot of the SaaS companies that are like US companies, they're quite comfortable using India for development. Of course, there are like a lot of Indian founders in SaaS. So I think that's one area that's like fairly common. There's a lot of activity now in crypto. Actually, that's one thing that I don't fully understand, because the law is not clear at all on crypto in India, but still we have like a couple of unicorns out of India in crypto. So I don't know how that works, but so that's broadly what it is. One other thing I would add is about, India's seen massive amounts of money in fintech. That's a hot space, but of course, in fintech, a lot of the business models are not totally clear to me. And I think if there's a downturn, I think maybe that's one of the areas where we'll see some significant pullback, because a lot of the business models are not yet proven. But that's like a few high-level comments.
Sure. Thank you. I happen to be connected to a couple of crypto and NFT startups, primarily focused on India. And the secret is they are Singapore domiciled. So there is complete clarity on regulation, etc. But they are able to operate effectively. But anyway, nevertheless. Next question is towards Abhi here. The backgrounds and experiences, again, when I was in the Bay Area, most successful VCs used to be operators and or serial entrepreneurs. When I moved back to India, what struck me was most VCs do have MBAs and investment banking backgrounds, and the differences were pretty stark. Of late, that has changed, and you're seeing more operators and entrepreneurs becoming investors. Now, these backgrounds and experiences on the part of VCs, how does that shape their thinking and perspectives? From a founder's perspective, what should they be aware based on the background of a VC that they are talking to? If you can shed some light, please.
Yeah, I think you hit the nail on the head already, Venkat. I think that sort of background is what shapes how we all look at our investments from our experiences, our lenses, right? So and there's no one general answer for it, but what I've realized, I'll just speak to myself in terms of how I think about things, and maybe that can kind of be a cue. Essentially, once you've been sort of part of maybe, I think the benefit that investors have is they see a lot of activity, a lot of breadth essentially, right? So they're able to compare and contrast startups doing things in different geographies, different verticals, etc., and just a large volume of it, and sort of working with them actively gives them the perspective. But when you've been there and done it yourself, as well as maybe an operator in an independent role, or even through, let's say, a large corporate, etc., you really understood some of the nuances and challenges that the founder goes through on a daily basis. So to give you an idea, in my opinion, making an investment, relatively it's not easy, but easier than the company building that comes after it, right? So essentially, when you really have to really roll up your sleeves and company build with the founder, that's the real challenging and the hard stuff, right? So you really want an investor who's probably been there, done that, and seen some of that stuff to help you out. To give an idea, I think that responsibility is what keeps me up at night and really I take seriously, because if you think about it, these are sometimes when they're first or second time founders, they're entrusting you with advice, right? They want, hey, how should I think about GTM? How do I think about product? How do I think about talent? Who should I hire? What should the org look like? Should I do channel sales? What should a percentage of channel sales be? How good is that sort of sales effectiveness, etc.? So you essentially are the sounding board. If you don't know it yourself, you bring people in to help them figure that out, right? And the worst thing you can do is to do harm to the company, because let's say you don't understand something, or you're not able to give the right direction. So company building is difficult and a very sensitive topic in terms of you being able to really create an impact. I give you an idea. So when I have a board meeting, for example, I'll spend substantial amount of time preparing for that 2 hour of board meeting, because I want to make sure that that's valuative to the founders. And it's not just a board meeting, right? Essentially, I have founders, all my founders are on my WhatsApp, right? We'll be messaging multiple times a week, and we're talking something as small to something anything larger. So I think you really have to be that port of call to just brainstorm. So I think back to what you're back to I think what you were saying, the difference comes from probably the perspectives and what I think each of us have seen. But also I think it goes back to what founders are looking for. When you pick your cap table, pack it with people who you think. You don't have to pick the best GTM operator, because that's also not the whole intent, is to be able to have diversity of opinion, but pick people who essentially be able to help you grow and scale and get the value from the ecosystem.
Okay, thank you. Any other comments on this point?
Yeah, I'll just add to what was said by Abhi. So in fact, because I myself was an entrepreneur for many years, so I thought I had a big advantage as an investor, because I could really connect with the entrepreneurs and so on and so forth. I think like a lot of that is sort of true, that we can bring some of that operational expertise and be a good sounding board and all of that. But actually, there are some advantages to being a pure financial investor as well, because an entrepreneur turned VC tends to be more empathetic with the founder, and sometimes you let things go longer because you sort of understand the challenges, as opposed to like a financial investor will say, no, what are the numbers this month? What's the pipeline? What have you closed? Why have you not closed it? And they don't really care about all the other soft reasons why something didn't happen. So I think I'm seeing the benefit also of like pure financial investors who are there to make money for their investors, which is just the right way to think about it, is their job, and not so much, have a lot of
empathy towards the founders. Yes. Fair enough.
So Venkat, I
yes,
would like
please.
to add here, I'm also a classic example of an operator and turning into a VC. And so I think one is basically the ability to understand the product market fit is, I think, fairly decent, I would say. And in terms of both Abhi and Shashi have mentioned, ability to contribute to certain aspects of that particular business, going very deep with the founders, and basically brainstorming in different areas, like it could be product or product market fit, go to market, and accordingly make those introductions. That I think benefits the founders immensely. So that's where I would like to add.
Sure. Thank you, Radesh. In the interest of time, I have one last question. This is to you, Radesh. You touched on the gap between founders in the US and India, narrowing, and how much progress you've seen.
Yeah.
But if you would like to call out, still there are some differences. So let me suggest a few things. The scale of ambition, the velocity of growth, things of that nature. Do you still see differences, and how best like Indian founders can, acquire some of those traits, the good ones actually, and close the gap so that India becomes a fantastic ecosystem, not just in terms of numbers, but also quality.
Absolutely, absolutely. So I think one is that, especially if I'm talking about enterprise startups, they need to compete globally if they have to go into the global markets, both in terms of investments and their ability to scale in terms of revenues. That actually, and that's where they have to kind of look into that particular ambition. And before that, I would also like to say that over the years, I've been seeing that Indian founders, they're very good when it comes to SaaS applications, solving like a problem in sales or a particular problem in marketing. So they're very good in coming out solutions. But when it comes to like hardcore infrastructure products, like for example, I've not seen any Indian founder coming out with a equivalent of messaging or like Kafkas or Sparks or basically anything around data warehousing solutions, or so those are things which I'm kind of like completely lacking to see in Indian founders. But what I'm seeing progressively is that a good set of founders are coming out with like open source products and basically developing like something that we had seen with MongoDB or MySQL, start off with open source and then basically have companies to capitalize on top of these open source projects. So that at least a welcome change I'm seeing. And what also I definitely would like to, as I'm foreseeing, is that as the founders are getting global exposures, they have this ability to, I think they definitely have this ability to come out with some cutting edge applications, and it could be from robotics or could be in blockchain or could be in AR/VR. So I can definitely anticipate that particular change, welcome change to coming in. Now, in terms of ambitions, they need to be very much global in terms of how they're ability to scale. And that is also, there are a lot of people to emulate for the Indian founders. So already there are 12 unicorns in this Indian B2B startups who have gone global. Freshworks recently got their IPO, expecting a couple of more IPOs from Indian B2B enterprise companies. So that's actually a very good positive signal for them to emulate upon. And as I mentioned earlier, that quite a few of these founders are already situated out of US. They have worked in US companies and they kind of know where they need to like head out for. And actually, the valuations, I think Shashi touched upon it. I'm seeing that the valuation is also kind of very much catching up, and there's no actually correlation in terms of the revenues as well as the valuation that they're going for. I think more or less, I think in sync for good founders, it's almost in sync with. It's coming out to be in sync with US founders. So I think they have a great time for Indian founders to kind of look global and scale global, and then basically have this ability to ambitiously reach scales.
Thank you. Any additional comments, Sashi, Abhi?
No, thank you so much for your help and moderating the panel, Venkat. This has been fun. Good chat.
Thank you. Thanks for your time. Now I think it's time for audience Q&A.
Hi, everyone. So we have one question came up from Venkat Rajlu. It's from YouTube. So right now the panel is also going active on YouTube, our official YouTube channel as well. So Ms. Venkat Rajlu is asking, how do investors from Valley look at IP-driven, companies founded inside India?
Sashi, you want to take that on, please?
Sure. So all VCs love IP, of course. So I think the fact that the startup has IP is great. I think what we would look to make sure is that is IP really defensible outside India. So we would do a search to make sure that it would be something that can be that can hold in the US and maybe to even start the process of filing patents outside India as well. But I mean, IP is great. I mean, every VC is always looking for startups that have something like unique that they can get behind.
Absolutely. I think that's a very good point, Sashi. So one thing, what I have been closely observing and enjoying every moment because the Venkat, the kind of questions, some of them hits the bullseye, as Abhi rightly said as well. So this is a great time for Indian startups to go global. And we are seeing that, especially, Rajesh is also mentioning about, especially B2B, enterprise startups, right? We are seeing that trend as well. Even, one thing it's also heartening to see is, especially when it comes to valuation expectations as well, right? So it's, one thing is very clear and it's evident, since it's coming from the horse's mouth, even the valuation is in par with Silicon Valley as well. That's very, very heartening to see. I think, I have no more questions from the audience as well. Venkat, or any panelists, if you want to take it up and, maybe extend for a couple more minutes would be great. But one thing, for me, another thing, what Venkat was really bullish about is mentioning about zombies, right? So that really strikes as well, because the one thing what we see from founders from overseas, especially from US, is fail early, fail fast, and if it doesn't work out, shut the company, right? Rather than being zombies. Because since I also work with founders, what I have realized is how long the founders, even they are at hibernation mode, moving from a survival to growth mode, it's very, very critical as well.
Great point there. And I did touch on that in one of my earlier questions. For me, velocity of growth is absolutely important when I put my investor lens on, and what's the slope and what's the growth. And if the slope is not that good, I would like to understand why. And because that's a indicator in terms of how the company is going to be performing later. Any final thoughts, comments from the panelists? Floor is yours.
No particular thoughts, Venkat. This has been like a great panel, and I'm like so excited for what's in the future for Indian entrepreneurs and Indian startups. I think we're going to have a phenomenal few years ahead of us. So I'm very excited about all that.
Absolutely. Yeah.
I would just say to your audience, please reach out to us if you're interesting ideas you want to talk to us about. So we're always welcome to meet new and great founders.
Rajesh?
I think great panel discussion. Enjoyed being a part of the panel. So thanks for having me.
Yeah. So let me close with my own personal thoughts on this. I mean, we talked about sectors and the areas of the future, and India is a country with so many challenges and struggles. So every major challenge opens up an opportunity, whether we are talking supply chain, logistics, agri-tech, you name it, healthcare. And I think as Indians, we do have an advantage, I believe, a very, very large market with very serious problems. It's an ideal scenario where founders with great insights, if they are going to take on the mantle, I think the money is out there for great ideas and founders. That's my personal opinion. And when you really look at some of the technology trends, whether it is metaverse and Web3, I mean, ignoring all the hype on some of the nonsense that goes on, but fundamentally there is like a lot of big opportunities out there. And you need to be looking at certain macro factors and tailwinds. Okay, 5G is coming through. Once 5G becomes, then the reality of metaverse is much closer. So you need to be mindful of certain factors like that, including government policies and so on. So with that, let me close my thoughts.
So, one thing, maybe I'll also close with a closing remark to this. One thing, Venkat, one of the valid question you also asked is how to get into the minds of US investors, right? Because I'm pretty sure some of the founders here, even though they achieved the product market fit, also figuring out the GTM strategy, they could see, early signs of growth. What Abhi has said, when it comes to the founder market fit and also the investor founder fit, right? If pretty much, if the founders clearly know what is the investors should target for, I'm pretty sure We have MTEL Ventures here, also Arca Ventures, and also Sri Capital as well. So overall, it's a great discussion for me personally. It's a a great learning curve. I'm pretty sure each and every participant has had a great time as well. And thank you so much, everyone, for joining us. Hope you had a great time with all the panelists. Have a great evening.
Thank you all. Thank